Hey guys, and welcome to the next video in the A trading course. So in this video, we won't be going over any charts. I just wanted to truly talk to you about market illusion and how I personally view the market and how you should and need to shift your mindset and overall thinking, as mentioned in the intro. So every day, your mindset has to be extremely focused and you need to be thinking as essentially a market maker and how the algorithm thinks. You can't go into this market still with that retail mindset like, oh, I see this as a head and shoulders pattern, because that's false illusion, right? Illusion. How do you, as a person, as a trader, how do you view the market, right? No one else. Are you viewing it by these false head and shoulder patterns that get blown out? Are you viewing it by just random make believe lines that price doesn't even respect? It just goes whatever. Or are you viewing the market how it truly is ran, which is solely based off what? Liquidity, highs and lows. Each candle depicts specific orders, and that's why the term liquidity is so profound in the market and why it's so important. Because if that's that last sell order, which it shows us with the candles, what is resting above it, stops in the form of what? Liquidity takes the stops, takes people who are buying, then induces, and we form liquidity in the market, right? So market illusion is extremely powerful and it's rewiring your brain and thinking to how you view the market. For example, as far as baby pips go, most people would see this as resistance, lower low, right? And then bearish engulfing. So as soon as this candle closes, they'll sell. Little do they know we're at a monthly order block in imbalance fill. So we're at that breaker. Also, we need a pullback to mitigate that if sales are going to continue. So they're looking at a potential over 100 pip stop loss because they want to enter at the wrong time in the market because they have a false thing, a bearish engulfing. Now, this is an order block, right? But no low has been broken. Nothing has been confirmed, right? We can easily see off the bat, no liquidity was taken here. Well, I had the swipe, but it still has to come back. Liquidity run here. Structure's built in, but we're also within this range. So we have our everything we've gone over in the course. It's actually viewing the market and seeing what it's truly doing, right? What did the market actually do here? You don't have a break and retest. You don't have anything. You don't have any pattern, nothing, right? They bought up and then they initiated sells, right? But what was the last move where they bought before selling? Because they're not going to come in and take out their sells. These are the market makers. What do? They're going to hit the bottom of that range, right? Here you can see this order block was never touched. The supply demand zone was never touched because they're not going to come into their buy orders. This was the last point of mitigation. So again, they'll come in to what? That breaker, because this is where the initiated buys, this is where they induce before actually taking sells. They'll come in, they'll mitigate their buys. They won't mitigate retail buys. They'll keep their sells because they're still in profit because they get in at the best prices, which is all the way at this wick, which is that FU wick. Then they initiate the sells. What do they do again here? They come back again, the last candle before the down move. And it's the same thing here. Here was that actual last up candle, right? So you could take the whole zone, but really, again, they want the best price, which is that FU wick, which they come into. And it's the same thing over and over again, right? Induced retail here, they failed to break the low, but price created a low and create a high, take an internal liquidity, and then do what? Swipe external. This is how you need to view the market. So again, how I personally view the market, you have market makers that come in and initiate. Then you have facilitation, which is what? The algorithm. So you have market makers and you have the algorithm. The algorithm is the computer. So when your session's open, you have your market makers come in and physically place orders. Same with New York Open because the stock market open. All of these were physically placed in their system by the market makers. Everything in between is that inducement, that algorithm. So the whole market is based off algorithmic trading, but you need to be dynamic because of the fact that we have market makers that facilitate and input these orders and also build in that algorithm. So you need to truly shift your mindset and look at the candles as orders and where they're targeting, as opposed to patterns, lines, and all of these randomness in the market. Again, each candle represents an order being built, and above the highs and lows are liquidities. Why? Because those are where resting orders are. So I hope this helps, and we'll see you in the next video.